When Treasury Secretary Steven Mnuchin floated a new tax cut earlier this month, outcry came quickly that this new idea only helped the wealthy. Today, Secretary Mnuchin came out and put it in Congress's court. This after reports that Secretary Mnuchin was mulling a cut in capital gains taxes without following the proper legislative path. So what are we talking about here? Capital gains. Say you buy one stock at $10 back in 1980. Fast forward to today, and you sell the stock, which is now $100, if you're lucky. You would pay about 20% capital gains on the difference of $90, which works out to $18. However, if you index for inflation, and inflation's the key word, the original price would be worth about $30 in today's bucks, reducing your taxable gain to $70, saving you $4. Multiply that by all stock sales, and the government says this works out to what would be $100 billion in savings over 10 years. Still, people are screaming that this is really only for the wealthy. Joining us now, former CEO and chairman of UBS Americas and Fox News contributor Robert Wolf, and Wells Fargo chief economist John Silvia, who, by the way, is retiring today after 16 years at the bank. A wonderful run, John. Thanks for joining us.
Thank you very much.
We're thrilled. We hope that your friends behind you will start throwing.
Former chairman. You did my exit interview.
Yeah. I did the exit interview. I do a lot of exit interviews here. I did Robert's. Robert, I'll start with you first, because you, having been at UBS, knew what it meant for people to have all kinds of stock funds, whether they were 401ks, pensions, etc. Talk to me about the New York Times headline that set off the firestorm, and that was that the Trump administration was kind of moving toward a unilateral tax cut without bringing in Congress, and it would be for the wealthy who own a lot of stock.
Well, I think those are just the facts. It was going to be a tax cut they tried to do through the Treasury. Now it looks like if they even floated, it will go through Congress. Number two, it is predominantly helping the wealthy. That's just a fact, because they are going to have the greatest number of capital gains because they own a disproportionate amount of the wealth in this country in housing and other type of hard assets and stocks. So those are just facts. I'm not supportive of this at all, because right now
would you be if you were still running UBS and dealing with a lot of clients who had a lot of stock?
No, because just like I was looking for a tax cut but revenue neutral when I was running UBS, I'm still a fiscal conservative when it comes to fiscal, even though I'm socially, I would say socially liberal. My view is it has not changed. We have deficits running up. We have debts running up. This is really not the priority today. Let's fix infrastructure. Let's get stagnating wages. And let's look at fiscal responsibility. This does not help any of those.
If you're trying to win a popularity contest, John Silvia, you cut taxes. People absolutely love having more in their pockets. What do you make of this? And to Robert's point, the federal deficit is pushing up against $1 trillion. The difference between what taxes are coming into the Treasury coffers and how much this government spends. Unbelievable. But is that sort of a wiggly number that people don't relate to compared to the popularity contest of cutting taxes?
There is a popularity contest in terms of cutting taxes, and I understand the incentive in terms of lowering indexing to capital gains such that the return on taking risk and investing is increased. But there are two problems, and Robert mentioned one of them, the revenue neutral problem. If you, in fact, going to cut taxes and you have a number, whatever it is, you're going to look for, in Congress, a way of getting revenue from some other source. Well, that's going to complicate the distribution problem. Whatever the distribution is in gains and capital gains is going to be complicated by the distribution problem of getting a revenue neutral source of taxes. The other issue is, yes, the capital gains indexation brings it into line with other income that is already indexed, but there are still, like interest, which is not indexed. How are you going to deal with these problems? Because portfolio managers, investors are going to shift their allocation based upon some assets that are inflation indexed and some that are not.
Right. For every action, there's an equal and opposite reaction. But,
Absolutely.
But, Robert, the whole point that I think Treasury Secretary Mnuchin is making is that people shouldn't be punished for inflation, meaning when you sell these stocks, you get hit depending on the inflation level.
Listen, I can see us doing this over time at some point. The timing's not today. Our deficit's running up, our debt's running up, and we just did a tax cut, and the Congress is already talking a tax 2.0. I just think that today we need to help the middle class. We're all clapping about
Don't middle class own stocks and own real estate, and hence that is also subject to capital gains?
The answer is yes, it would benefit them somewhat, but when you look at really who it benefits, I think it was 68% benefited the top 10%. So, unless that range is inaccurate, a disproportionate amount benefits them. The other thing, what John said, is what are we taking away? And my gut tells me we've yet to take anything away from the highest earners. My guess is that will continue.
John Silvia, as you are about to retire, what is your dream? I can't grant it, but for the economy, what is your wish and your dream here?
Well, I think Robert's point, I'll just pick up on that. The long run aspect of running up these deficits is going to create some tension in the marketplace. So for equities or bonds, increasing deficits, increasing Treasury finance in the face of a Fed that is shrinking its balance sheet. For me, in terms of my retirement, looking at forward, I don't want any surprises in terms of a sudden inflation push to pay off the debt, and I don't want a sudden tax increase on my income that was unanticipated. Those are the challenges of being in retirement and looking forward to it.
Smart guy. Should not be retiring. Smart guy.
He's not. I'm going to bug you at home. You're going to come back on the air
more of that
on occasion. John Silvia. Robert, well, thank you and congratulations, John, for quite a wonderful, illustrious career. And thank your compatriots behind you. They didn't throw any spitballs, although that would have been fine with me. Makes good television. Hope they have a cake for you anytime.